Boom. Hey, everybody. Thanks so much for tuning into Young Money Investments. My name is Cameron Bennion, and today we have a new little episode. So, I'm going to try something a little bit different today. Normally, I try to use OBS to record all of my videos, but I just got done filming a video with Brad Smith on OTCs, on WeTrade HQ, on his channel, and I'm going to be the new long-term investor kind of guru, if you'll call it that. I wanted to try this new little platform to see if the videos were a little bit clearer. I have a 4K camera, but the video quality on a lot of my other ones has not been nearly as clear, and so I wanted to try this new methodology and new method to try and film these videos and see if I can get a little bit better quality. So bear with me if this is not kind of up to snuff. I like OBS because I can shrink, pull, do everything. It's just not as clear, and it's like I have a good camera. You probably don't even want to see all my pores and all that crap. You probably just want like the crappier quality, but we're going to roll into this and we're going to go over a few of my long-term positions. There's some things that I see, some companies that I would recommend getting into. I've not even put any of the chart patterns, I believe, on these. And so I kind of wanted to go over them with you and kind of give you some of my ideas in terms of what I see basically value in. Some of the strategies that I look for when I look at doing a long-term trade, I look at a couple different things. I look at usually getting into blue chip companies. I do have a spec company that I usually will go into. A spec company is a speculative or uncertain company. Maybe they have some growing pains that they might go through. They might not pan out to be a great multi-billion-dollar company, or maybe they're not a profitable company. If you're investing in a company, you better most likely be investing in a company that's profitable if you're going to be investing in it long term. So what I usually, run through a company when I'm investing in it long term is I like to look at the financials. I like to see the 10Ks, the 10Qs. Those are financial earnings reports that come out quarterly. We just got through earnings season a couple weeks back. We won't be hitting that for a while now. But those are things that I look at when I'm investing in a company long term. I like to find value companies. I like to find companies that usually have had a sell-off. But I see long-term potential in the coming years in these companies. Now, sometimes I end up getting in them for a few months, taking my profits out and seeing other companies to get into. But those are some of the things that I look at when I'm trying to get into a company for a long-term trade. Some other things that you probably need to know if you're getting into a company long-term is you probably need to know that there is going to be some down days. You're not going to be, trading it, in and out. You don't want to be like quick, with it. You want to put your money in. You want to not need to worry about that money and just have the faith and the confidence that the research that you did at the very beginning in that company is going to pan out over the long term. Now, sometimes are you going to get into a company and need to cut your losses that you thought maybe, was going to be a good long-term investment? Absolutely. It's just like any other, trade. If you're trading a company, you have to cut your losses sometimes. But the reality is sometimes you will buy into a company and it will drop 3%, it'll drop 5%. Heck, it might even drop 8 to 10% on you. But that's why I like not putting all your eggs in one basket and jumping into a company right away. The reason why is because you need to gradually sometimes get into a company. I love in a long-term investment if I get into a company and it does drop another 5%. If I look at the charts and I go, it had a little bit more of a sell-off potential, and it did, because that means I get to average down in my shares in terms of buying into it. On the reversal, on the flip side, if I got into a company, let's say I got into a company at $100 and I didn't put in all of my money, I wanted to build a bigger position. Let's say I maybe took and made it a $5,000 or a $10,000 position, just as kind of a basis. But I wanted to build that into a $30,000 position. I would have only had about a third of my money at $10,000 in that company in it. And let's say it runs up 10, 15, 20%, maybe even 30%. At that point, sometimes I'll go, you know what? I'm going to take my profits that I made on that company and I'm going to invest it in another company that might have some better long-term value. Now, we're going to get into a few companies that I see some pretty good value in. Let's exit the full screen right here and see if we can pull this up here. Let's see. Here we go. So we are going to pull up TD Ameritrade. And because of the way this is going to be with Zoom on here, we'll see how this is all going to transpire. So we'll need to probably move it over like so. Okay, so hopefully that's clear enough. What do you think? Like probably somewhere like that. That's probably a little bit better. I probably should have done this before I started filming the video, right? Things you learn on the fly. Perfect. We can make this little screen here a little bit bigger. Okay. So here we go. If we're looking at the chart pattern here on Facebook, this is a one-day chart. I've been actually looking at it short term, but what I'm going to do in a long-term trade or a long-term chart pattern, Facebook is going to be one that I do see quite a bit of value in, potentially for the long haul. I like Facebook, and I like looking at the pattern here on it. Because of the fact that it's had this massive sell-off recently, as you look at, the highs that it had come off of, and coming down and kind of finding support and, resistance as well. What I've seen here on Facebook is it's a great buying opportunity. Facebook, when I look at this company, I look at the next 5 years on this company. I look at any other social media platform that could potentially interfere with Facebook, that being, the other one's Instagram, Snapchat. There's one that my mom uses. I think it's called Marco Polo. And I look at those and I go, well, what could disrupt Facebook? Well, Instagram is getting very popular, but Facebook owns Instagram. I look at some of the other companies that Facebook owns, WhatsApp. I'm trying to think of anything else. Facebook really doesn't have any competitors in the social media arena. Snapchat, but Snapchat after their updates is just garbage, honestly and truly. I don't think that stock is a good company to get into personally. I was in it at one point, full disclosure. But I think Facebook has a lot of potential because it is not going to get uprooted and is the #1 company in social media marketing. Now, besides Google, and maybe it even is more visited than Google, Facebook is visited so much. Now, the way they make their money is off of ad revenues. Now, as TV continues to die, Facebook is going to continue to get more and more larger multi-billion-dollar companies investing in them. And so what's going to happen with Facebook is their ad revenue is going to increase. Snapchat is not very monetized right now. They have a lot of potential. Now, after a lot of these security, issues and things like that, these, they spend a lot of their money on trying to make Facebook socially acceptable again. They're revamping it, et cetera, et cetera. They had the issues with Mark Zuckerberg up on Capitol Hill, and having to talk to them about the Cambridge Analytica issues. It has really tried to reverse right here, and it found resistance. And if you look at it, it's very simple and easy to see why. You look right here, you can see where it had resistance before. So if you bring it right up to here, you can see where it had resistance. Let's see if we can bring it right through here. There we go. I probably could have done this a little bit higher here, but you can see where there was resistance, and that it hit resistance right here previously. and then has continued to trend down. Now, as you look at it, it's coming down to another line of support right here. You're looking at a double bottom right here. I see this as a great buying opportunity. Now, if it does break and crack the 160 mark again, as it did right here, for a short-term trader, you would sell out. You would get out of this. Now, what I would see and say is this is a great buying opportunity. If it does crack the 160 right here, you can look over here and you can see where it had traded previously and had support kind of down in here. Now, again, you could kind of dip buy some more right through here. But if it did break that, you're looking at old support where I had bought in actually quite a few shares in one of my accounts. My long-term portfolios right down here in the 149 range. 150 was support once again. So if it does crack this 160 support right here, it's going to have another sell-off. I really see this as my very best #1 long-term buy right now is Facebook, because if you are able to buy right here in the 161, 160, price range, it's going to go up. I promise you, I promise you, promise you. Don't do this based off of my opinion, but I've been in the game for over a decade now. And this is actually one of the companies that I bought in back when it was at 1836 or 1856, something like that. After it IPO'd at $40, tanked and basically was cut in half. And I rode that up to about $70 a share. And I hate that I sold that. That was back when I was like probably 19 years old. So this is one company that I had saw a lot of value in because of the dip buying opportunity, and I see that again because of where it's at currently. I mean, that is a sell-off of over 25%. I mean, 26, 27%. I definitely see you being able, actually it's 30-something percent. Holy cow. Yeah, 35%. I see this as a great long-term, play. It's just great. Even if we have a recession, they will get hit. Sure, every company gets hit, but if you can leave your money in this company and ride it through, I don't see any reason why you couldn't. You're not going to make money in this company. If you're looking for another play that has been that's been hit pretty hard recently, you could look at none other than Baba. And I'm going to show you the chart pattern here on Alibaba. I have nothing on Alibaba right now. So this is going to give you kind of my thought process. Alibaba is basically the Amazon of China. Basically, they are a company that, see if we can pull it up there. Basically, Alibaba specializes in a lot of the products that you find on Amazon. People or business owners, e-commerce entrepreneurs purchase those products on Alibaba or AliExpress, get them sent to the Amazon factories, and then from there, that's where us in America, we are buying those products. Now, Chinese companies in general, JD is a company that I currently just sold out of. I dip bought on the recent sexual assault allegations on the CEO and I got out. But Chinese companies in general, Alibaba, JD, Tencent, these are multi-billion-dollar Chinese companies that a lot of the American hedge funds have gotten out of because of the uncertainty with Trump, because of the uncertainty with tariffs, because of those market factors. American companies or investors have said, we want to take that money and we want to switch it over. All right, I forget where we were at basically with Alibaba. We had a little bit of technical difficulties, but long story short, the thing with these Chinese companies is they all have been oversold because of the fact that a lot of these American hedge funds and all these companies are wanting to get out of Chinese companies because of all the uncertainty. If there's one thing you should know about the stock market, it's that the Wall Street hates uncertainty. They hate uncertainty. They hate it, and they will sell out right away. This gives you, the private investor, the opportunity to dip buy and buy on these companies. So if you do take a look here on Alibaba over here, you're going to notice on the 180-day chart here, you're going to notice a very strong support right through the center here, right? And so if we draw this line of support here, boom. you're going to see a very strong line of support. Now you're going to see where it was way, way, way oversold, and it would have been nice to buy in here, right? That's an 8% return alone. I still see a lot of good long-term potential in this, though. You are going to come up here on a little bit of resistance because of the fact that right here it has been consolidating quite heavily. So you will notice right here, it is going to, you're probably going to run into some resistance. It probably, if you're wanting to make every last penny, I would maybe wait for a buy or some sort of pullback right in here, bounce off of your EMA right here, and then for it to run up from here and then probably do some more consolidating. So I would maybe potentially wait for a hit and then a dip off of this EMA line, but that's just me personally. That's just kind of what I see with Alibaba right now. I do see it as a great long-term buy though, because even if you do get in here, you're going to be able to ride it up, long term. It should be valued up in this area, and that's a 24-25% return. So holding Alibaba long term is a great option. I'm just going to go over these two. I really don't want to spend a whole lot of time, like looking at the RSI, going over some of these other things. I'd love to go over some more of these chart patterns with you and kind of the things that I see. But in terms of two companies that I really like currently, I like Alibaba, I like Facebook. I'm trying to think of any other ones I want to potentially throw your way. My spec stock that I have currently is Tesla. Spec stock, love it. I think this company is valued long term. It's going to be a great company to be in. Recently, it has had quite the push up. I had bought down in this area and had rode up this nice little 10% return, and ended up selling out just because I saw some resistance in this area. If you look at Tesla breaking through here, you can notice that it has had a little bit of consolidation right through this area, right? A little bit of basically resistance is what you're looking at on here. So Tesla, I don't know if it'd be a great buy currently, but it definitely could continue to run up. It has kind of consolidated the past couple days through here, but it could still run up and have another 5% return. But I like Tesla as my long-term spec stock. I like the financials of the company in terms of where this company can go. Right now it is not profitable, and that's why it is a speculative play. I wouldn't recommend putting a large portion of money in Tesla, but I do like Elon Musk and some other things that we could go into later. But for the sake of time, and for the sake of just trying to get a video out, I wanted to get this video rolling. I wanted to kind of go over some of the companies that I see value in long term. And if you are looking to get in, like I said, probably out of all these, Facebook is probably the best one to get into currently if you're wanting to look at some short term upside potential. So anyway, thank you so much for tuning into Young Money Investments. For those of you that have not watched this channel before, hopefully I will continue to get to see a lot of you more in WeTrade HQ. And I can be of some assistance in helping you kind of get this long-term game figured out. The great thing with this is you don't need to look at your charts every day. You don't need to get on your app every day. You just need to have a portion of money from your 9-to-5 job set aside to continually invest in these companies. And that's the thing, is you don't have to time the market. Even on you get paid every 2 weeks. Every 2 weeks, if you like Facebook for the next month, keep putting some money in Facebook. Maybe you're not buying it at the great price that you got in this week, but continue to put money in there, continue to build, continue to make some sort of effort made so that you can build towards retirement. And that's kind of the goal with long-term investing, is you're not looking to be a day trader. You're not looking to be the next Rhett Van Leeuwen. You're not looking to be the next Bradley Smith. You're not looking to be Connor. You're looking to be a smart, driven, family man or woman that wants to set aside money and be able to build that future for your family. And I think this is a great way to do it. So thanks so much again for tuning in to Young Money Investments. Hopefully this all worked out great, and I will talk to y'all later. Bye.